Yeah, hello. I'm back again with another video, and this is an update to what I recorded yesterday. The movement I was predicting yesterday actually happened the way I predicted it. It actually happened that way. Now, what did I predicted yesterday was this. I was seeing the drop of price at this current level. At this level, I predicted the drop of price at this structure. So what are the confluence that I used to predict that movement? The very first one I used was this trend line and this structure here. So I was expecting price to get to that particular point and give me the candlestick um, action reaction there. And look at what happened exactly after I think I was doing the video when this movement was happening, this strong movement was happening. So look at what happened after the two bullish movements, and you can even see lots of momentum during that period. Because this first bullish movement engulfed this bearish candle, and that was massive. And see, the next candle was also a bullish movement candle, but there was lots of momentum. It wasn't as big as the previous one. Now price got to that level and reacted to it as I predicted. So the very first one was a doji, followed by a doji, but this second doji, this bearish doji, was had a bigger body compared to the previous one. So seeing all this in within this particular level shows this something is about to happen at this particular point now. So this is when I'll be like going down my entry time frame to be looking for setups. I'll be looking for setups to sell, because I always try to catch the movement as early as possible, because good movement is very spontaneous. Good moves it moves in a very rapid way. So before you know it, you are left behind. So that's why I always try to join the trend at the earliest stage of the movement. The earliest stage of the movement. So how would I have joined this trade? Let me show you how I was supposed to have joined this trade, because I couldn't take this trade yesterday. When I came back in the evening, I saw the movement already gone. I was like, wow, and look at this opportunity. Price dropped almost 300 pips. Almost 300 pips. So let me show how I would have capitalized on that movement yesterday. So let me go back to 15-minute time frame. That is my entry time frame, my setup time frame, and my entry time frame, 30 and 15-minute time frame. This is the whole movement that was happening. You can see how choppy this movement is. You can see how this market is just like doing all these things. So I would have seen this to be what's it called, to be area of liquidity, and this place also, because price is just like moving in that pattern within it. But the very first trade I would have taken on this would have been this, because anything above these 2 points, when price move above these 2 points, is going to be a very key place to watch out for. And if you look far left above this point, the only place you can have entry is here. The very first place you can have entry is here. Okay, let's now say the price now, because this I2 is very significant, this I here, because price moves in a very funny manner. That is why I always wait for confirmation on good. So this would have been what I would have done here. So after seeing this, I will consider this I2. I know something might happen when price gets to this point. You see how price tapped on that I here. Let price react first before you go in, before you bounce in. So that gives you rooms for you to confirm the actual movement. You get. So this is the very first thing I would have done. I would have noted this place, this point of interest here. This will have been my first point of interest. So, and this level 2 will be like noted. So seeing price reacting to this point, I was like, okay, I think this is cool. Now the only thing that will call me in is the close of candle below this point of interest. I have to see candlestick closing below that point of interest for me to be able to confirm that level holding price and pushing it downward. So after that, I will enter my trade at this point here and put my stop loss above. You can see at this idea. So see how massive 100 pips just got. I just got the 100 pips, boom, straight up within 2 hours. Less than 2 hours, I'll get that 100 pips. And look at this. For me to be able, one thing is for you to know where to enter. Another thing is for you to know where to leave the market. You have to know how to exit the market at the best time. So the very first thing I used to do is that I use the structure to take my profit. Though I target 100 pips, 50 pips, 200 pips sometimes. So, and I capitalize sometimes on the movement of the market, the way market breaks structures. I use that also. Look at this now. For me to be able to close this trade, I will wait for price to take out. I will wait for price to react to this level. And once price react to that level, I'll wait for the next level for price to react to it. You can see capitalizing on the movement of the market is very, very important to maximize your profit. Is very, very, very good if you can inculcate that habit. So that is one thing. That is what I would have taken yesterday from the market, but nevertheless, it's fine. So now, what is really happening today? What is really happening today in the market? What is really happening today in the market? I will go back to my 4 hour. Let me clean up this for me to have a clean chart. Now going back to 4 hours time frame, what is happening? So after taking my profit at this level, look at what is happening again. Price is trying to respect. It's respected already. Not even trying to respect. Price respected this structure here. First time, second time, the third time is happening again. So I've seen this formation of candlestick. Look at this here. Okay, I'll know that okay, there's high tendency this market is going to go bullish, maybe out to this level, then drop again. I don't know, depending on what the market is doing. Now, what will I do? What am I expecting to do here? I'm in a sell market already. I'm selling this market. Why am I selling anything? I know what I'm doing. Gold is very, very tricky sometimes. I'm selling the retracement for the bullish movement. That's what I'm doing. That's what I'm doing on my entry time frame right now. So how did I get to do that? This was what I saw. This was what I saw. See, I saw this point of interest here, and I saw it as a level at which markets might just retrace, then start the bullish movement. Now, where am I planning to enter this trade on the bullish side? Here, this point here is where I'm looking up to enter the bullish movement. So that is where I'm trying to look up to start the bullish movement, and I'll be looking at this very, very closely. But for now, I'm selling the retracement to buy the movement. Simple. Selling the retracement to buy the movement. I'm selling the replacement to buy the movement. So selling it here to get, I will look at the price before I even close this, because there's one thing about gold. You might think its structure is holding, but the point at which the price is respecting that structure might just be a mere pullback to continue the movement. Let me show you what I mean by that. Now let's go back to 4 hour. This movement you're seeing here, can just be a pullback from this impulsive movement. This is what I mean. This impulse movement, this whole thing that is happening here, can just be a pullback, and the market will just continue to go bearish. Anything happens in the market, we don't control. I don't control the market. I only react to what the market is doing. That is why I don't like setting pending orders sometimes. And as time goes on, you will see that this strategy is working massively. So now we are in profit already. So I'm not risking more. I'm risking just 0.5% of my capital on this trade right now, and my entry is around, let me check 1961.67. I think I pull in around there 1961.67. That is where I pulled into the market, and I'm risking less than my stop loss is 1965.23. 1965.23. So I'm risking less than 50 pips. You can see I'm risking less than 50 pips. So I'm risking less than 0.5% of my capital. So that's fine. That's massive. So this is what I'm looking out for on this market right now. So I have to be careful. That is why I just risk minimal, and I hold on to this price, to this market. I don't own the market, but this is what I'm expecting. I'm expecting the fall here, pick it up and move. But if that should fail, I'll be looking for that pullback at this level here, at this old level here, which might even coincide with the trend line. Might coincide with the trend line. So let's see how price will move currently. So that's what I'm talking about. Once you know where the market is trying to go to, you are like trying to predict what the future might hold in the forex market. So okay, when price gets to this particular point, it might move up, then move down at so point. They might also move up at this point. So those are the main things you need to understand. Once you understand the price, the movement, then you can just open up your trade and just be free to do other things. Just free yourself and let the market do its things. So that is what is currently happening right now in this market. So I will hold on to this, and I will update this video as time goes on. So that will be all for now.